Hey guys, welcome back to another video, and today I'm excited to show you what order blocks are. So let's jump right into it. Order blocks form in an uptrend or a downtrend. There are bullish order blocks and there are bearish order blocks. Now, this move up right here would have fair value gaps in it. This move down would create an order block. Not in every case, but that's where you find order blocks in the retracement. So in a bearish situation, it's the bullish retracement, but it's still called a bearish order block. And in a bullish trend, it's the bearish retracement where we create those order blocks. So let's hop into the charts. Here we have a bearish trend or a downtrend. Let's widen this up. As we can see here, we have highs, we have lower lows, lower highs, lower lows, lower highs, lower lows. So we have a trend, a bearish trend. If you can't identify trends, I made a video on trends, and a lot of what I'm talking about through this video, we have already learned. So you can just go back and watch those videos and come back to this one. This right here would be an order block. This is the move up that we see in a downtrend. It has to be consecutive bullish candles, so it needs to be at least two candles, and they need to be in a row. So it can be 3 candles, it can be 4 bullish candles, but they all have to be in a row. Bullish, 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 not bullish, bearish, bullish. No, bullish, bullish, bullish. So here we have 2 in a row, and I mark it out at the wick, at the bottom of the wick, because it's overlapping with a fair value gap. As you can see, the line is going through a fair value gap. So we're gonna mark it out at the bottom of the wick. Now here, see, this is not an order block. This actually be a fair value area. It's not an order block. We're gonna go with fair value areas. Why is it not an order block? Because they're not consecutive. Okay? Here, this is an order block because they are consecutive. 1, 2, 3. So now where do we mark it out? We don't mark it out at the body because we are overlapping with a fair value gap. So we mark it out right here at the bottom of the wick. Now, is this an order block? No, it's not. It is not an order block because there are no consecutive candles. I mean, there was a bullish, then there was a bearish, bullish, bullish, bullish. Those were consecutive, but it wasn't. This was a bullish candle, then it would have been an order block. Okay, so now let's go over right here. Okay, so we have this bullish or uptrend right here. Higher highs, higher lows. Now, what do we see right here? An order block. So we mark it out at the top of the wick. That is an order block. We go a little bit higher, not an order block. Let's go look for a little bit. Okay, use right here. Okay, now let's go over when an order block is not valid. Okay, and be a couple reasons why just 2 reasons why an order block is not valid. One of them is we've already explained. There is a bearish, in this case, a bearish candle in between these bullish candles, so it does not count. The other reason is if there's not a fair value gap in the leg lower. Now, what is a leg? A bearish leg consists of a high and a fair value gap. That's a leg. It's that simple. There's just a high, so imagine that's the high, and in this move down, there is a fair value gap. This is actually called an order flow leg. It's important to write that down because we're going to be going over order flow. It's basically the whole strategy. So this is called an order flow leg. In a bearish situation, there's a high that creates a fair value gap. In a bullish situation, there's a low that creates a bullish fair value gap. We do not care if there is a low down here or not for the moment. Okay, we just care that there doesn't need to be a low for there to be a leg lower. Okay, so don't think about that. Just think about a high and a fair value gap. So what do we have? Where was my order block? Right here. Okay, so this is the leg lower right here. We have this high. Okay, and we have some fair value gaps. Okay, we have some fair value gaps in here. which means that the order block that is created down here at the bottom of the leg is valid. It is valid because there are fair value gaps in the same leg. If there were no fair value gaps in this leg right here, this failed to make a fair value gap. Imagine there was a wick over here. Okay, now this fair value gap has failed. And now there was a wick over here. Okay, now this fair value gap has failed. This order block right here would not count. It is not an order block. But since we do have fair value gaps, we can mark out this order block. So where do we mark it out? Do we mark it out at this bottom wick? No, we don't, because it's not overlapping with fair value gap. So when it's not overlapping with fair value gap, we mark it out at the bottom of the body. It's that simple. So let's try and find some more. Right here we have one. Okay, so here we have the high. That's the high. We create these fair value gaps, which means this order block is valid. Okay, it's not overlapping with a fair value gap, nearly, but it's not. So where do we mark it out? We mark it out at the body. Okay, right down here. And basically order blocks, price tends to retrace back into order blocks and then continue lower, continue higher. And when it starts disrespecting these order blocks, that's when we can tell that it's seeking liquidity. But we're gonna go over all of that together. We're gonna bring all these bits and pieces together, and it's all gonna start making sense. Okay, you just have to trust me on this. We have to learn these individually, because you have to know them by heart. You have to be able to see liquidity. You have to be able to see fair value gaps, order blocks, highs and lows. You have to know all of that first before we can go into the strategy. Okay, so now I'm just gonna go over, let's go over one or two more examples. We'll do one bullish and one bearish. Okay, right here. Now there are two consecutive bearish candles, but this is not an order block. Okay, I'm gonna give you a second. Analyze this area right here, and why is it not an order block? It is not an order block because there is no fair value gap in the leg higher. This is the low. This is the leg higher. There is no fair value gaps. So this order block is not valid. Okay, you would not mark out that order block. Okay, now this right here, why is this an order block? Okay, it's overlapping, so we take the high of the candle. We have the low of the leg, and we have fair value gaps within the leg. So this means that we have this order block. This order block is confirmed. It is an order block. Okay, here's a bearish example right here. We have, this is the high of the leg, order blocks right here. We don't overlap it. It's not overlapping with a fair value gap. So we mark it out at the body, two consecutive candles. The high of the leg is right here. Sorry. The high of the leg is right here. And we have a fair value gap in the leg. So that's it. That's all it is. Order blocks are consecutive bullish or bearish candles depending on the trend. It is done on the retracement of the trend. See, that's the retracement. Bullish, bearish order block is formed on the retracement. And it becomes an order block once we pass this level. Once we pass the bottom of it, that's when it becomes an order block. Okay, it's not an order block straight away. Like when we go retrace right here, it's not an order block. It becomes an order block when we close below the order block. That's when it can become an order block, because that's when price can actually retrace into it. Right now, price has not gone down here, so we cannot retrace into it. So it's not an order block. But yeah, they need a fair value gap in the leg lower or higher. And there needs to be two or more consecutive bullish or bearish candles. That is an order block. Thank you for watching the video. The next video is going to be on fair value areas. So we have gone over fair value gaps, liquidity. But yeah, that's it for today, and I'll see you in the next one.